Hey, good morning, everybody. Morning, Arturo, Beth, David, Alan, Francois, David, other David, Jan, George, Craig, Wrongermer. Good morning, everybody. We have earnings picking up this week. That's we also have the FOMC, the Federal Reserve, kicking off a meeting tomorrow, wrapping up on Wednesday, and a highly anticipated rate change announcement. Probably going to bump a quarter point just based on all the statistics, unless something crazy happens. We also have, gosh, I think it's, let's just share the screen and let's see. We got flash services PMI this morning. We've got CPI. Nope, that's Australian CPI. We got consumer confidence. That's tomorrow. We've got the FOMC, of course, and then we have PCE later in the week. We have GDP. I mean, that's really like the recession gauge right there, GDP. Historically, anyway. I guess they changed the definition of that all, but I suspect we already did a recession. Maybe we do a double dip, or maybe this was a recession. We go back through some expansion, and then we go into a greater depression, quite possibly. If so, right now in the markets, very precarious. We can potentially top out now and go lower low, or we could do a retrace, hold support, go higher high, new all-time high, that is, and then go into a decade-long correction. Probably get touted as a greater depression, because I don't think any of us still alive remember the Great Depression. So we may call it the Greater Depression. Just keep it in mind. It's on the chart. So advanced. So we had the GDP right there coming out on Thursday. We got core durable goods and orders and blah blah blah. Pending home sales. So Thursday's a big day. Right on the back of the FOMC on Wednesday. And then Friday, we've got that core PCE, employment cost index, and revised consumer sentiment. So this is a big week of news and earnings. Earnings we haven't even got to yet, but here's some of the biggest earnings. We've got Microsoft coming up tomorrow, Alphabet, that's Google, got Snap, Visa. This morning already we had DPZ. It's on the list. That's Domino's Pizza. Phillips, and a variety of stuff. And then we got tonight, not really huge earnings tonight. I don't know if it's going to be a market mover tonight. Some of these are big companies and may get some move. And tomorrow morning before the open, we'll have Verizon, GM, 3M, GE, Spotify, Nucor, Raytheon, Alaska Airlines. So there could be some stuff to talk about tomorrow. And then Wednesday, of course, we've got Microsoft and Google and Snap, and then before the open we'll have AT&T, Boeing, Coca-Cola, Tilray. They're almost broke, almost out of business. It looks like, according to their stock price, and then General Dynamics here. Then after FOMC we'll see Meta, Chipotle, and eBay, Mattel. And before the open on Thursday, I mean, we've got a pretty stacked week of things coming, so this ought to be interesting. Hey, Valerie, glad to have you back again. Looks like we got Jason, Larry, Kevin, Michael, Marizia. Michael didn't say hello back to back. I'm so shocked. It's the first day I can remember in a while. Anyway, Marizia, morning. PD and Dan. Good day, everybody. So here's the week for earnings. The big one coming out Wednesday. That FOMC rate change can be a market mover. We'll see. We haven't really had a pullback in a long time. If you haven't been paying attention, March 13th was the bottom, the last bottom. All the way back here. And we've been ripping without a 3% pullback. Now, you might be like, JT, why are you focused on this 3% pullback that you've talked about for weeks now? Well, it comes from the fact that a 3% pullback is very common in the market Very common, in fact. And if I can find my chart, which I did not pop it up. There it is, right there. This one right here. So this is all the 3% pullbacks since World War II. 3 plus, 3% or bigger. There's a lot of them. All right. The longest period of time we went is about 300 days. And these are trading days between drawback, drawdowns, pullbacks, consolidations, whatever you want to call it, corrections. So sometimes we have just a day. Sometimes we get 300 days. On average, it's 47 days. The median is 38 days. We are hanging out up here at 90 days now. When I got this chart, I probably ought to edit it and remove that, but we're hanging out right up in here now. Right near, getting closer and closer to 100. You can see there's a little grouping right there. We are at a point where we can see a 3% pullback. Now, could it be a 5%? Yeah. Can it be a 10%? Yeah. Can it be a lower low? Yeah. It's all possible. The further we climb this, the more and more likely it is that any day now can be the day. Now, I think this record over here was set during a period of relatively benign economic expansion. We just kind of cruised. I don't think that's the current environment. We've got lots of threats, lots of craziness kind of happening. Any little black swan thing can tip the cart. The VIX is at just ridiculous lows right now. We can see outsized moves. So please be careful going all in long. All right, that's the warning. Now, anybody that's followed me for a while, I usually throw the target up conservatively. This fib line comes in at 45.99. If we come up and we just scrape right there at 45.70, and this is based on the daily close, not on the candle wicks or the highest high or anything like that. It's just on the daily close. That's the simplified version of this chart. If that 45.70 was it, I mean, that's good enough for me, really. We could see the pullback here. We got a little bit of so far. This could be the start of something bigger. 4,500 is kind of the support level. We get below 4,500, we're probably going deeper. If we stay above 4,500, we're probably gonna do that little right up to the top there at 4,600. All right, that's kind of I know it's a big range. We were sitting at 45.36 right at the close on Friday, and the futures so far this morning, pop those up, and a little bit of flat. So throw that back to that chart, and we'll pop over here and actually look at the live futures chart. Well, it is delayed data, but sitting right on the 30-minute roadmap line. This is not overly bullish, and on Friday we came down to the 1 hour and bounced. Something to keep an eye on right here in the 1 hour roadmap line. We start getting below that. And this is ES, this is the futures, so these prices are a little bit different than what you see on the actual cash index here. They have a little bit of different pricing, and these opened last night at 6 p.m. and we've been rallying a little bit. Now, a little bit, this is basically flat, 8 points. Where, historically a big day for the S&P 500 is 30 points. We've been seeing 30-point days like crazy. So 8 points, not very big right now. That's almost flat. So we'll see what happens when we actually open. This is so far showing some weakness, but we could get a bounce as long as we're holding under, right now we're holding under that 618 of that initial drop. Kind of bounced right off of it there. That's a measured bounce setup for continuation lower on almost every way I look at the market. Now that continuation lower just on this one little pattern right here would throw us down to 45.24, possibly 45.40 on ES. All right. There we go. So now in Q, A little bit different story. We are under the 1 hour roadmap line. We are already down near the target on that first move down, and second move down, and third move down. This thing is showing more weakness than the S&P 500. Can we get continuation lower? Sure we can. 4 hour support right down here, hanging out around 15,365-ish in Q. You may be like, JT, how do I convert that to anything I can trade? Divide these prices by about 41. It gets you roughly in the ballpark of the QQQ prices. Or you can just look at the QQQ chart, but you're not going to have all the overnight action quite as complete as looking at the futures. And it gets us down to about 365. All right. Russell here, small caps, IWM. This is holding up really well. And we're just under the 15-minute. The 30-minute here, still under it. The 1 hour here, just bouncing off, similar to S&P, kind of actually touching it a little bit. And then the 4 hour, still got way down here at 192. This one you divide by 10, and you get the IWM, roughly the IWM price. Now, this one found resistance at that daily downtrend line and has pulled back a little bit. And there was the high here, the high here, and the high here. That is August last year. That is February this year, right before the banks kind of blew out. And then we just came up and tested that trend line again. So far, that's a series of lower highs. Everybody sees this on the chart. It's not like I'm just magic drawing this. I did expect it to bounce and pop. That is what we got right now. If we can break out above that trend line, this is the target up here. It is a wide target, 2100 up to about 2250. And if we hold here, really, if we start breaking back below 1950, probably coming all the way back down here where we were just a couple weeks ago at the end of June. And really, you know, the 6th of July. Russell has made a huge rally, and we may retrace that. All right, that technically could be a 5 up, but it looks a little sloppy, and we may get a little consolidation and a little squeak out higher. Now, CL pushing up through. This is positive, and the target now has become 80, 82, 85 for just the fib extension off the consolidation, and then the wedge thing, the target off the wedge that it did, puts it up here around 84.50. That would be a beautiful thing. What happens after that? Not sure yet. We'll have to see what happens as we get up there. And we may do a little ping pong thing where we come up to the 1272, pull down back to the 100, pull up to that target, possibly extending up there. So this could play out over the next couple weeks. I am long UCO. No, yeah, UCO, not USO, UCO. GC, grinding a little bit. I'd like to see that get continuation higher. We may have to go down one more time. Bitcoin finally breaking out of the consolidation to the bottom. May want to go revisit the daily roadmap line. Now, I can make a case where this was a 5 up with the highest high right there on July 13th. 618 correction would be typical after seeing that. Let's remove a few of the fib lines and draw that on here and talk about it really quickly. 5 up, a 618 retrace would put us just shy of the roadmap line, right here around 27.5. We get that touch, we hold that support, we break back above the candles dropping into it. That's a measured bounce setup. We can go much higher off of that. How much higher? Let's draw the fibs and just guess that we bottom here. That would put the target up here around 37,000. 37.38. And it could set us up to get the extension at 39.6, which would match the move that we did back here in March, April. This move right here. Oop, moving the wrong thing. And my chart's not in log. Chart in log, there we go. All right. Make that the right size. Move this back over here. There we go. That's better. I don't know where the extension was coming from, but there we go. Right there around 37, 38. That would be a beautiful place to go. And it may drop right on down here. Ethereum needs a deeper retrace. Watch for the support at the roadmap line. If we don't hold it, probably coming down here. Dollar continues to go retest this consolidation zone. If we turn down, going lower low, 98, next extension, then 96 below that, where I've had that target since the beginning of the year pretty much. If we get up through this consolidation, back to the roadmap line one more time. All right, stuff actually moving today. ISRG, looks like the market just opened. Getting a little green, just a little bit of green on the S&P. ISRG, that's not the current list. That was Friday's list. Let's reload. Let's flip this back and flip this back to pull up the current list. There we go. PKX, look at that extension. Right up to the 4236. This is getting ridiculous on POSCO. Protect your profits if you chase that one. It's like a double from where it was a couple weeks ago, a couple months ago. BDX, beautiful pop. What are we looking at? Yeah, 1618 right there. It could possibly extend up to 294, but at this point, I would expect a correction. That's a beautiful pop. Could pop, could continue to pop. We're seeing that kind of theme going on. This is a medical specialty and biotech type situation, so be careful. Those don't always follow my patterns. LRCX. Yeah, that one is working on that head and shoulders breakout. I mean, 950 would be the upside there. Right up in that zone, 950. DPZ reported earnings. Looks like they beat on the top, but missed on the bottom. Got a little pop initially, but they're just hanging out in the consolidation here. They may retrace that gap up. Be careful. If we see it break down below that low right there, probably going to come back to the roadmap line. Does have resistance right up there, and we've been unable to go test it. That's a lot of red candles. After that gap up, I would be highly cautious that we get a drop back down here. SYM. That looks like it wants to retrace back to the roadmap line. And it may just kind of go sideways until the roadmap line catches up with it here. EDU. It looks like we may get a little New Oriental. 49 and 53. Oil, natural gas, it was making the movers, but I mean, that looks pretty horrible. And NG1 exclamation point, still going sideways in this box and may continue to go sideways. The roadmap line is almost down to the box, and we may just continue sideways. I don't care what anybody says about shortages and this, that, and the other. Be careful. Chasing natural gas, that played out last year. This is not the hot trade this year. That thing played out from 2020, played out over 2 years, and then now it's dead. Like, not really moving. SCDX, well, pharmaceutical, and pop above the roadmap line, still below resistance, and not sure I expect this to do much of anything right now. It's a whole lot of consolidation in there, and it's just really stuck in the consolidation. Look right where it broke down, and it's just hanging out in that same zone. When you draw it like this, it doesn't look like it's going anywhere. I mean, look, it consolidated in this whole area, really. Like, if you pull this on over, that whole zone there is just a big consolidation. I don't really see that much opportunity there. It's a biotech. I mean, biotechs can just be like, hey, we got our drug approved and we're going to make bajillions of dollars. And it goes to, 300. That's not the way I play the market, though. AMC closed a bunch of theaters and popped. That makes sense. Close your ability to make money and then pop. They're expected to lose money on billions of dollars. And things not looking good for them to stay in business. Let's be honest. SCU, nice pop up here above. It was above the main consolidation, but it's still below the high from right back here in October. I don't know. That's not a pattern that I would trade at all. It's not garbage. It's just sideways, nothing. Shop continues to squeak higher. My shop trade was done back here, made like 15,000%, and just continuing to grind. And this overlapping grind isn't really high probability. We did that pullback and doing that extension, and then I do expect this thing to come back to the roadmap line at some point right out here. This is the daily roadmap line on this chart. Just kind of expect it to do that at some point, so I'm not chasing that one. Much better one to look at, like this one, where it hasn't really gotten the extension yet. It did the bounce, and the extension would be way up here on Airbnb. Boot, another example of this. Like this one pulled back, getting the pop out, the breakout, and the extensions would be up here around 100 to like 150. That would be kind of crazy on Boot, but it continues to grind a little bit higher and a little bit higher. Coin is also another one of those, and it's on the list down here. We came up and we hit resistance at the prior high right there. Now we may see a retrace back to this support level, these prior highs, before we can get the extension. The measured bounce setup target would be up here, but don't discount prior resistance as a place where we're going to meet supply, which is what we did. And with Bitcoin pulling back, this one may have a little trouble going on higher. So NTR coming up kind of right near the roadmap line. This chemicals, agriculture, and that looks like a bearish dumpster fire chart. That's a chart for going lower. Be careful. Now, is that high probability to go lower? No, not right at the moment. We kind of already did this big correction right here. 1272, busting through the 1.0. If we turn down at the roadmap line, we might go down for 43. If we start breaking out above this consolidation right here, that would be an indication we're going to go on higher again. Right there, resistance all the way up here at 92. You could aggressively enter above the roadmap line, but I would be very careful. If it starts rolling back over, we can definitely go lower down to 43. And that would be like and that's a pretty substantial haircut there. So be careful. Be careful. That'd be like a 30% loss, 33% loss. Old Dominion. I mean, that was a nice move it did. Look at that. Right up to the 1272, retrace back to the 100. If it finds support at the 100, where we kind of topped out, twice before, and then little consolidation there before we pushed on higher, we could get the extension up to 458. ARGX, that one continues to go in the toilet, and 0 is not far away from 3. MSTR, it was way extended, blew through all my targets, and a retrace would be more than expected on MSTR. I do expect that one to come back significantly, maybe back to this orange box from whence we broke out, but stay tuned. I'm not sure right there where support's going to be exactly. It can come all the way back down there. Yeah. Look right here. Probably coming back right in that right in that zone. my best guess on where to expect MSTR to come back to. Right down there, 370, possibly down to 350. Find support, turn up, and go on the next run. STGC, that looks like a horrible chart, and I wouldn't touch it with anybody's money. Whew, that's a bad chart. That is a dumpster fire chart right there. That, I mean, that's got to be the wrong chart, right? Let's see. STGC. Yeah, it was probably a start engine. That's probably what it was. That was supposed to be. That's an OTC. I don't know. I have used start engine before. If you're unfamiliar, you can kind of be an angel investor using start engine. I've invested a couple things. Not really anything that's done anything so far, but I have used start engine. Equifax, right back to the roadmap line, maybe going to break down. That's not overly bullish on Equifax there. Now, this could be a measured, could be a roadmap line bounce, but right now, that's just not looking like it's going to go. KOD, Kodiak, that's a biotech, and biotechs are dangerous. Biotechs can do this crazy gap stuff right there. Yeah, it just lost 3/4, 60%. Went from $9 to $3. I mean, when your drugs don't work, surprise. Now Tesla, this could be the start of a large correction here. Please be careful. Please be careful. We moved up like this. This can come back down in the zone. Come back to 178, possibly even as low as like 145. Those things are all on this chart right now. Maybe like JT, you don't understand. They're making so much money, gobs of money, and they were still making money back here on this correction. We've moved up. This really kind of indicates a big three-wave move. We haven't. This last move was just straight up, and at the minimum, we could see a 618 retrace of this last move here. That would put us back down into this 210 area. 210, 205. Be careful. We could see a bigger pullback in Tesla. FDX also getting a little pullback off of that extension. Everything's really extended. I do expect a lot of correction here. And XPO, that's right out to the targets, and yeah, the head and shoulders played out there and played out both directions. Craziness. Expansion of range, and retrace would be what I expect. I would expect a retrace at this point. Coin, probably gonna retrace. We already talked about that briefly. AXP, back to the roadmap line. There's the support right there. Then Twilio, last one on the list, just stuck on the roadmap line. Watch for this one to continue sideways. That's kind of what I would expect. We got resistance up, major resistance up here at 77, and support kind of right where we are. Seems to be the zone right through there. If we can break out up or down, we could see some extension, but right now that's looking like it could be saying I'm bullish, but that's not bullish continuation. That's just sideways. So bias for the day. Let's come back over here to ES, go back down to the 30-minute, kind of look at this. What is the lay of the land? Now, if we break out over this box, if we can get super excited, get above the box, we're going for another extension higher. That extension higher, 46.22 on ES, 46.40 on ES. That makes S&P 500, probably that 4,600 area up there. Going to draw that on here. The numbers won't quite match. It'll be 46.90 or 45.91 and 46.08. With the potential, get a daily close right up here around 4,600 and that orange box. So if we go higher, that's where we're headed. If we break down, back below the low, coming down to at least 4,500, get below that, watch out below, we get deeper retrace. So that's what we got for today. Lots of stuff moving. I'll be in Discord, going live again at 11 to kind of wrap up the beta test group for VVD. If you want links for that, you got to come be in Discord and stuff. So link is in the description down below. Thanks for coming, everybody.